What's up guys, welcome back to another video. The trade for yesterday ended up playing out exceptionally well, where we're calling for more upside, and that is indeed what we got on Bitcoin. If you guys also recall, I also mentioned that Solana was looking like a much better trade compared to Bitcoin. And so behold, if you just take a look at Solana, while Bitcoin took its time to go up by like 1-2%, Solana has pumped almost 10% since yesterday. This is honestly just the power of looking through multiple charts and looking at the relative strength for each chart. People that always say, oh, I only trade Euro, or like I only trade Bitcoin, always kind of baffles me, because when you do ask them that question of, hey, why is it that you only trade one asset? They'll say something along the lines of like, it's because I know this asset, or like, I'm just really good, like I figured it out. Like I figured out Bitcoin. And like, if you sit and think about it for a moment, you have a bunch of hedge funds and mutual funds or whatever, like big funds, national sovereign funds or whatever. They are hiring one of the brightest minds out of the top universities, making sure that they're paying them exceptionally well to try to figure out this asset, right? To know this asset. And even they will not be able to do this. And so it always baffles me when, a normie, and I consider myself a normie as well. I'm part of you guys, don't worry. Like when they say, oh, they trade only one asset because they understand it or whatever. It's like, yeah, then it's likely just familiarity bias, and we were taking that for expertise or understanding. So yeah, if you've ever, wondered if you should take a look at a few more charts or if you should focus on just one, understand that as long as it is a chart, as long as it's made up of candlesticks, as long as there's an open, high, low, close, you are able to apply most of your strategies on anything. Like it doesn't matter if it's a stock, a futures, indices, forex, crypto, could even be a meme coin. Like truthfully, as long as there is candlesticks, the data is printed the same, and you can apply those strategies just as similarly. So if you've ever wondered about the question, like should you just stick to one asset or should you start learning a few more assets? The answer, at least from my side, is always going to be pick up a few. You never know, like certain times of the year, certain periods are going to be absolutely horrendous for, let's say, crypto, but could be amazing for Forex. And certain times of the year could be very terrible for stocks, but it could be amazing for crypto. And what a shame if you only trade, let's say, Bitcoin. Like how much opportunity would you be missing out on just by, limiting yourself to like one asset? And my stance on this has always been the same, which is as long as there is candlesticks, as long as there's a chart, as long as there's a open high low close, whatever strategy you're using on, let's say, Bitcoin is going to work in Forex with slight differences. So essentially all of these assets, as long as they have candlesticks, they are essentially the same thing, just with different packaging. Packaging meaning it's still a chart. It just comes with a different name, and sure, it may move slightly differently. So yeah, like if you want to improve as a trader, look into other assets. Of course, if you're just starting out and if you're worried about getting overlapped, feel free to stick to one asset first. But if you're an intermediate trader and already been doing this for a while and you find yourself being limited by the fact that, let's say on Bitcoin, I realistically get most weeks I get maybe 2 traded days that are fantastic for Bitcoin where I get an A+ setup. Some weeks it's even just one. And there are even certain weeks where I get 0 opportunities throughout a week that I pay plus. So if you feel like you're limited by the amount of opportunities that you're getting on a day-to-day basis, look into other assets. But otherwise, I feel like that was a very long rant to start off this video. We are going to get into a prediction for Bitcoin today. So in terms of Bitcoin, the setup is still super clear. Like last week, we got the weekly bullish candle flips, which means this week our bias is going to be pointing towards the outside. Secondly, we are bouncing at the moment from this weekly order block, and until this order block gets invalidated, basically we are going to be looking to buy the dip here and to sell higher, because the truth is, if you take a look at the overall market structure and the overall order flow on the weekly chart, we are still forming high highs and high lows, and until that changes, basically until this gets breached, you are still looking at further upside. The bull run is very much not over. In fact, the bull run is very much still there. In fact, let me give you another piece of data that may help you. Speaking about that, the win yesterday that we bought puts us at 102 wins out of the last 127 calls we've made publicly here on YouTube. So if you're new to this channel, or if this is your first time you see me, just understand that you're probably at the right place, because we can be right more often than we're wrong. But anyways, just taking a look at the news for next week, we have a federal funds rate, specifically on Wednesday, If you take a look here, that's federal funds rate. And at the moment, there is basically a really high chance that we're going to get 3 rate deductions before December. And if you know anything about the financial markets, especially about risk on assets like Bitcoin, like the stock market, like indices or whatever, anything that is speculative in nature, they benefit from low interest rate environments. And so far, United States of America is the only, one of the last main central banks that have yet to cut the interest rates. This is planned though to start this month, and it will continue all the way to December. You can only imagine how bullish this is for a risk on asset like Bitcoin that needs an environment of quantitative easing would thrive. If you recall back to the 2021 bull run, one of the big reasons why Bitcoin and all of these other, altcoins were able to have such a big alt season is because they were in an environment where the interest rates were basically zero. And when I say basically, I honestly mean zero. 0% interest rates means that money is free flowing in the economy. And of course, you pair that with a lot of money fintech. You can only imagine that just sets the recipe for, mood shots. Now, I'm not going to say that this time around is going to be the same, but at the very least, we are going to be starting to get in an environment where it favors, continuation of a bull run. So if you're a long-term trader, just understand that here again, I know the best time to buy would have been back at 70,000 or something. But honestly, this is not even a bad place to buy, because every single time throughout this whole bull run, which means the last couple of years, as long as you bought the dip at some kind of a fair gap on the weekly chart, in both of these cases here, they bounced from fair gap. Even this side, it bounced for a fair gap. This one, again, this is just a retracement. Order blocks at fair gaps are the same in the sense that they are both considered PD arrays. As long as you're buying low into these PD arrays, you look to sell high, and that's going to be easy money. So just understand that the bull run is not over. That is my start. At the very least, I do not see any indication yet the bull run is going to be over. Anyone that says otherwise is just making a prediction. And, there's nothing wrong with predictions. It's one thing you just need to understand is that humans are terrible at making long-term predictions. Take that with a grain of salt. Believe whoever you want to believe. But at the very least, from what I can see objectively from the charts, as well as, the thesis that I kind of just painted out, I don't see yet any indication that the bull run is over. Anyways, just understand that so far on the weekly time frame, we are looking for further upside, at least for this week. Anyways, on the daily chart, yesterday's candle closed bullish, which is a really good sign because so far we are still targeting this level right here at 113,300. Granted, we can actually go further up to this bearish further gap today. In fact, let me just remove all these shorts to make the chart a bit cleaner. So the daily target for today could realistically be 113,300 to 113,600. I do fully expect this level to get breached, in the sense that you're going to overcome this bearish further gap and you're potentially then flip it into bullish support. But that's still kind of the next step. At the very, just for the context of the day, which is an intraday trade, that is going to be the target. Also, because yesterday's daily candle closed bullish, it means that our daily bias today is going to be bullish. Now, another interesting thing to note is, I don't know if you guys remember from yesterday, but I taught you guys a little bit about value profiling. Specifically, talked about value areas, and I talked about how to use value areas. And one of the things that I mentioned was that this so far looks like a convincing breakout out of the value area. And so in the event that you retrace back into the value area at 111,200 or 111,300, it would be an amazing place to pick up some Bitcoin or to just take a little short-term trade up to the upside. So far what we can see is that we already had a couple of instances where, price actually dealt with the value area. But so far, this is looking like a pretty solid breakout. So in the event where you retrace back into the value area, this is where I would like to see price actually bounce. So that level is going to be $11,300. And that's exactly what you're getting right now, right? Price retrace into the value area and off you go. And right now, the fact that you have formed a new high, it's just further confirmation that, yep, the bottom is definitely in, at the very least for a intro boot perspective. And so the setup for today is actually going to be super simple. So this right here is a order block, right? If you just take a look at this is now an order block because we have closed above this series of down closed handles. So in the event that you retrace into this order block and as well as this fair value gap right here, the order block happens to align with the fair value gap. And so the setup for today is a retracement into 112,600 for a move up to 113,600. So that's a $1,000 move. That is 100%. And you can definitely get into our trade out of that. Now, sure, you can also go a little bit lower. Maybe you might go to 112,200, 300. Doesn't really quite matter until this order block gets broken through, basically. Until you go below 111,300, this entire block here is going to act as support for you to ride a move all the way there. Now, don't get me wrong, you could potentially go higher than that, but I like to set my targets pretty conservatively. In fact, if I do not mention targets, just understand that whatever trades you take, make sure you pick a profit at 2R. Because truthfully, as a trader, that is all you really need. Now let's go into the lower time frames just to see what we're feeding with. And this is the Asia session. You fill in that key level right there. The profile basically, a belly area. So far, London has shown a very convincing breakout to the upside. And so again, today's setup may look like a accumulation breakout continuation. Essentially, Asia is your accumulation. London is showing a very convincing breakout. You before the New York session, which means the hours between 5 to 7 a.m., which is right about now, you're going to retrace into some kind of key area. In this case, it could be the Asia high. It could be that Bermuda gap. Again, doesn't matter. This entire block is an area of support to retrace into that. Between the hours of 7 to 10 a.m. New York, you're going to look for a pump. Now again, this target may or may not be hit. That is not the point. The point is that you take a long once you start seeing indication during 7 to 10 a.m. where you are getting price in from the 5-minute chart showing bullish indication or like showing bullish in stability. Once that happens, you jump in. Maybe let's say your entry is here, your stop loss is there, just calculate it at 2R and you've been in set. Again, the target is just a reference point. I always take my profit at 2R. Sometimes I may leave a runner, but most days I do take my trades at 2R. So far, at the moment, I don't see any cause of concern in terms of invalidation scenarios. Again, like you would need to really go below $100 net at $1,000 in order for this bullish week to get invalidated. Just understand that at the moment, the higher 5 frame is pointing towards the upside, the 1 hourly chart is pointing towards the upside, and even the 5-minute chart is pointing towards the upside at the moment. So just continue to ride the wave higher. And speaking about ride the wave higher, you could also just start breaking out of the London, like basically breaking out of here, and this may become a new bullish order block depending on what time you see this video. This could very well be a possibility, just like what happened yesterday, where instead of retracing back into the Asia high, you just continue forming new bullish order blocks and you continue going higher, which is a second scenario that I backed out yesterday. If you do see this happen, just quite literally momentum trade takes higher, then place your orders at the order block. There's a stop underneath the order block, target at 2R, and like you would have a really good time trading. One thing that's important is that we are, whatever the case, as long as you're taking longs, you're going to be taking longs in the direction of the trend. If you've ever heard of traders the trend's your friend, never counter trend trade. Like it is free. And in this case, as long as you're focusing on knots, you're going to be trading in the direction of the trend. And that also means that you're going to have a much easier time catching moves. And at that point, like the details don't really matter too much. Whether you retrace or you just continue going up, as long as you're trading in that direction, you're going to have a pretty good time. And speaking about a good time, if you would like my help to help you install this system that you're seeing here and has allowed me to achieve an 8x set publicly documented track record over the last 7 months, then feel free to click the first link in the description box below. But otherwise, see you guys in the next video. Ciao.